So we were discussing last upon um, the same stuff, and I think the flow it all and the flow went off. So yeah, we were talking about the same thing, that what about the growth and the value investing, and how growth expectations can be met for now. Since I think the current mayhem people haven't seen who have come into the market newly, and you guys have certainly, I think Krishna is about to come to complete a decade, and Lalit, you already have spent more than 2 decades for now. So coming from you guys would be a great sigh of relief for people.
Absolutely, I think all I see again is a bigger picture over here, Preeti. I'm pretty much used to in terms of seeing such fall, or probably and every single fall you take an opportunity to build across, right? All you have to keep seeing is how comfortable are you in terms of your valuation. Number one. Number two, is there enough amount of margin of safety for the stocks which you buy? Number three, are you having a quarterly tracking of the stocks which you have invested, right? As long as these three play hand in hand in terms of what you are doing, I think you will be fairly successful in at least generating 18 to 22% return CAGR over a 5 year period, and which is fantastically good. And if someone is probably assuring you or giving you higher, then all you have to do is namaste. uh, all I look at from a larger perspective or a bigger picture, right? Like let's see this. I mean, Apple's market cap is almost equivalent of India's GDP, right? You can't have an aspiration of 125 crore individuals equivalent to a company's GDP. So I see that there's going to be a humongous amount of wealth which is going to be created in this decade. I'm on ground level in interaction with a lot of management, advising them, or many of them, lot of startups which I've discussed in last 1 decade. The way they are working, in terms of being successful, the way they are thinking, and all the while India as such did not have too much focus on R&D. Now we are seeing a great amount of R&D being there in India as such, right? So you'll see a lot of positive results, and the base effect is way different from what we had last 2 3 decades vis-a-vis what we are going to create in this coming decade.
Got it. And I think Indian markets will definitely outperform. So that is the key point people should understand, in terms of horizon that they're holding the stocks. It's just that the fundamental factors have to be studied meanwhile. So any confirmation on this front, I think people generally give an example that X stock has given 10x or 20x or 30x returns, but people don't compare the kind of plummet some stocks see because of the flaws that the company have. So anything on this particular risk reward, or the kind of studies people can perform for their long term portfolios to be in.
Krishna, you want to add in anything? I'm going to, of course, share my views.
Sure. I think what's really important to understand is that a lot of great companies often go through periods of drawdown. They're not they may fall less than um, the market, but they're still going to fall. And if you look at the history of markets, you'll see that many times. In fact, there is some data. I'll try and put it out on my Twitter handle afterwards. But it generally says, like, every 2 to 3 years, you see a correction of about 20%. Every 5 or 7 years, you see a correction of 30 to 40%. So corrections like these are part of the course. What you need to make sure is that um, every business has its cycle, like Lalit was pointing out. Each sector goes through its business cycle. What you don't want to be caught with is, like, at the peak of the cycle, there's a lot of euphoria around a lot of the names or a lot of the leaders in that cycle. and you don't want to be caught when the circle is when the cycle is changing with businesses that you've bought at really really high valuations, um, and which are unlikely to have the same kind of business performance going forward. So again, I would say that keep in mind, not what the stock has done, but where is that company headed. And if you can get a sense about that, as a fundamental investor, it is your job to try and understand where is the sales headed, where is the margins headed over the long period of time, and are there any adjacencies or organic opportunities for growth that might arise. And as long as keep in mind that uh, the market is a discounting mechanism, so you are going to get opportunities from time to time if the future is not so clear. But all you need to do as an investor is study the opportunities available, understand what you're paying for it, and balance that risk reward through portfolio construction. So I'm not as concentrated as Lalit is, which is 10 to 12 companies. I prefer something more along the lines of 18 to 21 companies. That's sort of the range that I like to be in, with about like 20-25% of my portfolio being in sort of more aggressive bets, while the remaining 70% gives my portfolio stability. So I think for each person it's going to be different. But yeah, you don't want to be invested in 50 stocks with 1%, because you need to keep in mind how many companies you can actively track. And like Lalit said, and I also firmly believe that really small allocation don't lead don't lead to outsized returns. So it's important to keep that in mind. But before we move on, I just want to ask Lalit to sort of complete his point that he was making before the space crashed, which was, we have these big themes like defense, like green, and perhaps I should have spoken a little bit more about the fact that everything in the space is not going to do well. But Lalit was making an interesting point about how to find, or what are the other factors to look at within a theme. Maybe you can complete that point.
Yeah, yeah, sure. Right. I mean, see, for defense, what I was just mentioning is India is the second largest importer in defense, right? Third largest military spender. 4% is what we account in terms of the spend which we are having, as US 40-42%, China 14-15%. And defense has multiple sectors. You have satellites, you have drones, you have shipyards. I just took an example of shipyard. It's a huge market, 4-5 lakh crore, which is available with a very limited set of players. Let's not forget that if I go ahead 20 years back, India used to be a defense importing country with 70-80% of foreign acquisitions happening, and indigenous projects used to be just 15-20%. Now time has completely reversed. You're seeing 50-60% being indigenous and 20-25-30% being target being given, right? So it brings in a lot of potential for companies who are betting in it. Market might be big, huge in terms of doing it. There are limited set of players, BL, HL kind of stuff who are there, right? You will have to find your bet in terms of which are all the top 1-2 players with whom I'm going to stick on to a particular theme and do it, right? Similarly for electronics, right? I mean, in electronics, again, it's a huge market in India, 160-170 billion dollars, growing significantly 10-12%. Let's not forget, again, we are importing almost 85% of the import is happening from China, right? And other countries which is there. So it's a big market in semi knockdown units which we are seeing, and you have good amount of IPs which is going to get registered over here. So again, these are all the themes which you can always play. Stick on to the top 1-2 player because that gives you a enough amount of comfort in terms of corporate governance, which is going to be there. Having said that, portfolio के अंदर when you are having 11-12 stocks, you can't have everything and anything. You will have to stick for the story to play out, right? And always, I mean, your job is in this 11-12, 3 should become multi-baggers. 6-7 will give you something like 20-30% CAGR, and 2-3 will definitely become zero. The best of best mutual fund guys had investment in DHFL, had investment in Yes Bank. So if someone is saying that, hey, I am Doodh ka Dhula, and I'm going to bet on companies which are going to become multi-bagger, he's just lying outrightly. There will always be investments which will get zero. It's just that you will have to learn lesson. The lesson, once you learn, it's just that you will be able to come out from the pain much early than others who are waiting for an 100% erosion, right? You see a 20-30% pain, you see the management not performing, exit, as simple as it is. You see good amount of your portfolios going up, don't have a urge of selling across. I had a detailed thread on Twitter where I put across 15-17 points in terms of when one should take a call for sell. As much as we discuss buy, no one even speaks on selling, right? Selling is as equal as possible. I have my good friend Deepak who is also listening on this call. He knows being a trader, right? Selling is much more important than buyer who is going to be there. So I think those themes you need to select across, build your portfolio, have a probably a quarterly review or a 6 months review, which is going to be there, and see if those themes are working out. And if those themes don't work out for 2-3 years period, I think you will have to take the hard call of moving up. Sorry, Preeti, I think you're on mute.
Yeah, I can't hear Preeti, nor can I hear Vishnu. I think we can only keep the conversation going till then.
Yeah, I know. I mean, that works much better.
Cool. Yeah, I think I broadly agree with you know what you said about looking at the themes, and also uh, there's a lot of echo feedback coming on me. Let me see if I can do something. Huh. Yeah. So, I broadly sort of agree even with that. You are going to have a few winners in your portfolio. A large majority of my returns over the last, 5 years have come from these 3 to 4 to 5 companies, which have executed really, really well. And we have to keep in mind that Pareto's principle is going to play out. So 80% of your returns are going to come from 20% of the companies. But it's our job to see within the themes and within the exciting opportunities available where you can dive in and construct a portfolio, and again, across your portfolio, manage that risk and reward.
I agree with you, Krishna. I mean, my personal experience, and that's the reason probably I would, I keep saying people, hey, focus on more on small cap, mid cap companies if you're at early stage of your career or life, right? Predominantly purely because for large and mid, you already have what mid is more than 8,000 crores of market cap, right? There are hundreds of reports, which is that the story is almost over because it's almost identified by everyone. You don't have too much of returns being generated over there. All your efforts should be made to see a small cap move to a mid, and then a mid cap move to a large, right? And not often you get to see this, purely because the base is small. It is easy to prove for a small cap company to become a mid. The mutual fund institutional holdings, they don't have mandate to even hold. It's usually a mandate of more than 2-3 thousand crores of market cap, which they look at, right? So we have good amount of companies in the bucket of 300 to 3,000 crores, which is often not looked at, which often no one sees. And I am of a firm believer that at least I have majority of my portfolio has performed really well. And these are all the stocks which have given me 5-10x return, if not a 20, 50, 100 bagger stuff. At least a 5-10x has been easily made from that particular bucket. So pretty much important to construct the portfolio in such a way that you have decent allocation at the early stage of your life in good, decent small cap and pretty decent mid cap.
Yeah, absolutely. I also broadly agree with you. My portfolio construction is a bit similar. So about 70 70% of my portfolio is in small cap, and the remaining 30% is split between mid and large. What is large has used to be mid; it's now become large in my portfolio, which is a good sign. But broadly, I try and split like 70% of my portfolio being from 2 to 10,000 crore market cap, and then the remaining 25-30% can be in the range of like uh, 500 crores to 2,000 crores, which is slightly requires a lot more research to be done. But again, the payout can be proportional. So yeah, being 29 myself, I see the value in doing that, and really excited to hold these companies into their maturity to see what they become.
Yeah, pretty much. Preeti, are you back?
Yeah, I'm sorry I missed the middle of the conversation. However,
You
I
missed
think
the
when
most
Krishna,
crucial part of the conversation. You
I
must
listened. I
the
listened to the
story.
recording probably. But again, since we were talking about the portfolio allocation at last, so one small thing I would like you guys to add on here is that since now after this extended market rally, I think most of us have invested at peak, and I think the allocation of their portfolio might be at maybe at the ratio of 90s to 10, maybe 90 in equity and 10 into the any other kind of bonds or any other fixed income allocation. So what is the current shift people can make, and what is the kind of risk tolerance people can keep in so that it can outfavor their securities at the moment.
I don't. I mean, Krishna might be the right person because I might speak morely from a self perspective. So, I mean, like I mentioned, right? If you are looking at, you have to look from a goal based, target based, return based expectations, right? My return expectation might be substantially different from what it is there. But like I mentioned, right? In case if I'm preparing a financial plan for a client, and if I see if the client is age of less than 40, right? I usually allocate a 70-80% allocation for him on the equity side of it. You have to break it into multiple. In the 70%, 80% equity, you have a large, mid, small, micro cap kind of stuff. You have income, value, momentum, growth, cyclical, speculative, defensive stock, blue chip stock, and then you have, I mean, multiple segments in terms of equities being there, gold being there, debt being there, hybrid being there, something like cryptos also been there, right? So it's all end of the day matters on allocation which you are making, basis on the risk profile which you are having, basis on the goal which you are targeting, right? So all three of this is interlinked. I personally do a review of my portfolio in a quarter on how it has performed, how it is targeting, is there a RIGI which is required. I usually don't hesitate in terms of having to do any RIGI and accept that, yeah, I have missed my analysis in terms of how I have understood the situation vis-a-vis how market has reacted to it. So there's always a case. Contra obviously takes a quite longer time in terms of performing. I got Indigo probably at a time when every single PMS and every single mutual fund was selling in the market, and it took me some amount of time to even sit, realize, and see how the market is going to revert back when traveling is going to be there. I took Delta Corporation when every single casino was closed across, and people said, "Hey, people are not going to get back to casino. Forget about going to casino. People don't have income to even eat food, right?" So when I go and get into extra uh, calls of such size, right? You are the only lonely person who's sitting on betting on something which is completely hated by the market. Tough time, tough place to be in, but yeah, that's where maximum returns also comes across and give you a higher risk, higher reward kind of returns.
So Lalit, nice catch by the way. Right now the market is in fear mode, and probably people are at a mode wherein they are on the verge of getting a very secured kind of investment. But as you said, you do a contra bet. So, what are the current attempts you would like to make at the moment, or what are your choices at the moment? I would not like to take the names probably. If you are comfortable, taking any sectoral view or stuff, that would be great.
Interesting. Again, I mean, when you are just contra, it's not that contra because a stock or industry or a stock has fallen, you go ahead and buy it, right? It is just not,
No, no, so anything in the
making a
in
claim.
sub asset class or
See,
anything
see,
into
see, take
commodities
something
or
like
stuff.
take something like a gold NBFC, Manappuram or a Muthoot, right, which has not been even looked at the market. They continue to have pretty decent market share. Banks have, of course, dented in terms of doing it. You have Manappuram, which is now some 110 rupees, right? So, which is completely not looked at. Something sectors. You have PSU banks. I don't know. I mean, people hate it when I speak on PSU banks in the last 2 3 months. I have spoken about it. I think the worst is over is what SBI chairman keeps saying, right? I'm of also a similar firm believer purely because data points suggest that it is over. There's a good amount of realization which has happened. There's a separate bad bank which has been created. There's a good amount of NPS which have been done. You will see a good amount of credit growth uptick, which is going to happen. I have a lot of my friends who are working in the banking industry. They give me a lot of green shoots, data points in terms of how the industry is turning around. Infra, I have already spoken on. I'm highly bullish on infra. Again, a sector which is not looked at. It's a dirty industry, mind you. So it's not easy to play across or find across players in this industry where the company might make good, do a decent business, but for shareholders, the returns might be hardly nothing or a negative returns, right? So you'll have to again select companies on the basis of corporate governance. So infra might be something. Power might be there. Power, there's a lot of bets which can come across from say prepaid smart metering or a feeder separation which is there. Let's not forget that there's a de-licensing which is happening in the distribution business and power sector, right? Which is nothing but you will allow more than one company to operate in a particular state. Uh, and also not forget that AT&C losses for the last, for the entire sector is close to about 22% as compared to, global average of 7 8%. So there's a good amount of consolidation which is going to happen moment de-licensing is going to happen. So you have individual bets which you can take. Uh, Having said that, when you're selecting a 10 12 stock portfolio, you don't get a liberty to select across multiple stocks. I usually go on for a player number two or a player number three in that particular industry to check across. Credit rating might be one area which is completely not looked by the market. It's just that there's a lot of consolidation which is happening in the sector. But I see again a lot of them who are going to take new loans in the next 5 7 years. There's good amount of business which is available over there. The sector will get tightened up, but yeah, there's a good amount of visibility which is clear over there. So yeah, I mean you have sectors, power, infra, gold, NBFCs, banks, PSU banks are private as well. Defense I have already spoken, electronics, semiconductor, um, multiple sectors which is there specific to companies. You will have to take select. Preeti, you're on mute. I don't know if you're able to hear us back.
Cool. I'll just add in my thoughts till Preeti comes back.
Yep.
So, I would like to take the sort of contra bullish view a little bit away from, domestic equities into international equities. Right now, the NASDAQ has been beaten down pretty bad. Big tech has been beaten down pretty bad. I mean, when I look at something like Facebook trading at 14 times, earnings, um, able to give you double digit sort of revenue growth, double digit EPS growth, and even higher free cash flows. Businesses like that, businesses like Google, available again at around 20 times earnings. There are a lot of opportunities in that entire basket, in US stocks, and now you have the ability as an Indian investor, assuming you have the portfolio size and the risk appetite to go into it. international has opened up, and there's a lot of opportunity there. Because unlike India, they don't have circuit breakers there, and they have a heavy prevalence of algorithms. So when selling is triggered, that selling gets exacerbated multifold whenever there is fear and there's panic. And we seem to be at like absolutely crazy valuations. None of these are like stock recommendations, but just, I mean, if you look at Amazon's market cap today, and it's still absurdly high when you look at it in absolute terms. 1 trillion, like being north of $1 trillion. But when you look at the fact that its largest business within Amazon is actually AWS, which is growing at 37% year on year, uh, you know, on a huge base, you're almost like the valuation of that business alone is enough to cover what you're getting the whole of Amazon for. So everything else is, pretty much like either heavily discounted or you're getting it for free. So I would say, to look for a contrarian call, or to look for something where there isn't enough interest going in right now, I would say look at the US markets, specifically US tech. You can go right from the high growth spectrum all the way up to big tech, depending on whatever you're more comfortable with, whatever you're more interested in. But there are a lot of opportunities available for sure.
Great. Preeti, so we have spoken almost for 1.5 hours. I think it's time that we should take some Q&A if there is any, so that, I mean, our listeners have been listening for last 1.5 hours. We are open for any sort of Q&A. Vishnu,
Yes, sir. I'll just add. So, anyone who have any questions can put over here. We'll just add here. So we have a request from Santosh. I'll just add her speak.
I'm sorry. I think a lot of technical glitch today, and I'm being on and off. I'm so sorry. I've missed the most of the conversation, but the value addition has been great. So yeah, taking the questions for now.
So, Santosh here. Okay. Thanks, Lalit, for explaining your views and your methodology of investing and all. Been a follower for a long time in Twitter here, right? Um, so you talked about, how you bought the Delta Corp when everyone was ignoring it, when everyone was getting out. So similarly, we see now many such names floating around, like, be it pharma or API kind of a players, right? So what would you make out of it? Would you see similar opportunity there? See, Newland, it was at 2,700, now it is at somewhere in 2,000. And many such examples, I can give a lot of examples. What do you think of them? I mean, like, I'm sorry for, cornering you into a particular sector and particular names, but what do you think? Do you find any such names now?
I always have some or the other names which keeps coming, Santosh, right? And you always have, against every fall, you have names. It's just that market finds reason. Just like we have Delta Corp today, you might say probably a pharma which is getting beaten down, right? Let's not forget that US FDA is visiting India, a lot of pharma companies after a gap of almost 2 years. And the FDA letters have just started coming in. You had Sun Pharma, which came across, you had Glenmark, you had Lupin, which is there, and you will see many more mid-sized pharma companies, where there's going to be a good amount of FDA. I have been a contra investor 2016 ke andar I had invested in Sun Pharma. It took so much of my patience, energy, where 2 years the halal plant did not get the approval for the FDA, right? Despite management saying every quarter on quarter saying that no, we are going to get this quarter, we are going to get this quarter, and I had to finally give up, right? And I had to dump that across at that point of time, because that's how painful it is going to be. Because FDA letter आने के बाद में it takes a lot of time. A sequential steps are there for you to go ahead and get a clean sanction, right? So it's not going to be easy. Until then, you don't have any growth coming in, because majority of your exports is anyways going to be for UK, US, European countries. So it's a big pain in the ass if you are being in a sector. So you will have to select those stocks which don't have such kind of US FDA related pressures, right? There are always sectors which correct across, or you might find a theme. Say a theme like a privatization theme which might be there. I have seen the 1999 to 2004 kind of stuff where 10, 12 PSUs at that point of time were privatized. I don't know, you might not even remember the name. Bharat Aluminium, CMC, Hindustan Teleprinters, Hindustan Zinc. So a lot of them got privatized at that point of time. You saw almost 235 PSUs being there. Uh, and I'm literally fed up at this point of time of governments incapability of being able to privatize BPCL, which is stuck for last 2.5, 3 years. I mean, it's stuck almost for 8, 9 years now, but predominantly I expected it to be much faster because if you're not able to sell across something like BPCL, forget about then going ahead and doing something on sale, BHEL, Engineers India, right? So I think government has miserably failed here. I had bet across on privatization theme. I'm probably losing my patience because I mean, in a bad market now, even selling across and then waiting across is going to take a lot of time. So it's a tough call, Santosh. It's a very tough call. You might get it right at sometimes in terms of what you're betting across, but majority of the time there's a lot of pain also which is there. You will have to live with it. Then there are always bad companies which keep coming, the like of GVK, GMR, Lanco, Suzlon, IVRCL, BGR, and then there are fancy stories which keeps coming. Say something like a Bombay dying, where I'm going to demerge my real estate. I'm going to demerge my real estate. Every now and then you will get hearing, right? Anant Raj might be another player. So you will have to live with it. You will have all stocks. I had just put on Twitter yesterday a list of 250, 270 companies which have corrected more than 40% with a market cap of more than 1,000 crores, right? Now you can't say that, oh yeah, if it has corrected 40%, so it gives me a contra opportunity to bet on. Frankly, when I was going through the list of the 250 companies, I found 7 or 8 companies in an investable position. Was able to track some 15, 20 companies which were reasonably okay. So, I mean, that's how brutal it is when companies fall. That's part and parcel of cycle. And that is going to be as it is now as well. You saw all the new age tech startups getting beaten down left, right, center. More is going to come. Delivery is getting close, and I think it's close today already. 38,000 crores of market cap at 800 crores of loss. Some atrocious valuation, which I had pointed out. You will see much more pain in these kind of segments. Now, if you're going to go ahead and say, okay, Zomato, Paytm has corrected 50, 60%. Now it makes an opportunity. No, it does not at all. It will never. It will never. You can be a king in a private market. In public market, it's only cash flows, cash flows, and cash flows. Anything apart from cash flows, you'll be dead. It's just that the market will take its time, to pain or give you that pain. But if you are tracking anything else apart from cash flows, you're gone. So stick to it. Stick to fundamentals. Keep focusing on cash flows. Keep seeing on trends, themes which are coming across. Give an allocation for 5, 7, 10% over there, which you believe can go big. Yeah, I mean, I have been following that.
Thank you, Lalit.
Vishnu, any other
Yeah.
questions?
Hi everyone. So we are open for the Q&A session. So if someone is having any questions, you can send a request to us.
By the time any other questions, Krishna, tell me this. What's been your take so far, right? In the last 3, 4, 5 years, you have been in the markets, right? 2017. So you have seen a demon, you have seen GST implementation, you have seen some kind of attacks which came across. You saw COVID, you saw the pain of 2018, 19, and small cap, mid cap kind of stuff where 2 years literally nothing came across. And now you're seeing Ukraine, Russia, right? So I think all you have seen is a lot of events which has happened. So, from your experience, your view, how has the journey been so far? What are your two major learnings over here?
Yeah. It's been really interesting. It really shows you how resilient our Indian entrepreneurs are, how strong they are. That despite all of that, They continue to grow, they continue to perform exceptionally well, and they continue to compete on the global stage. When I look at a lot of these macro risks or things changing from now and then, you understand certain fundamentals about how the market is structured. And these could be which sectors are susceptible to oil, which sectors are rate sensitive, which sectors don't have pricing power. Within these, this could be either the sectorial level or at the company level. So I think I like to be a top down investor, so I like to look at what's happening in the macro, what's happening on a country level. But I also look for businesses that display some sort of competitive advantage. Now this competitive advantage could be in the business itself, or it could be in the moment in time in which we are in. So the business itself would be like Michael Porter's five forces. You look at companies which are able to uh, grow market share. They have pricing power. They're able to elbow out competitors. But it's also stuff like where everything comes together at the right time. Like an example of this could be something like Zoom. Now, of course, Zoom wasn't able to capture, capitalize on it and take those cash flows and build it into something more than just a video chat platform. But the example of that, like, now there might not be a sustainable competitive advantage there, but for a period of time, a year, 2 years, 3 years, 4 years, 5 years, businesses like that could really, really outperform. So yeah, one of the things that I've learned is that look for something where either the business itself is extremely resilient or they have massive tailwinds. And second thing that I've learned is that you know if you don't have a margin of safety, फिर पिटाई तो होनी ही होनी है. Like you have to look for margin of safety, and try and look for something that's a mix of both narrative and numbers. Because if you go for something that's only narrative, then it's not going to, like, at the end of the day, show up in cash flows. And price to story companies get hammered really, really badly. And at the same time, when you look at companies which are uh, which are only numbers and don't have the ability to um, you know recognize opportunity and go for it, and get into emerging areas, like companies like that are made obsolete over time. So I think these are some of the learnings that I've had so far.
Very nice, very nice, very, very good. Vishnu, probably we can take a question or two, and then
Yeah,
I
we
have
do
a
have
hard stop at
yeah,
10:15.
sure, sure.
Yeah.
So we have stock market scientist with our next question.
Hi, good evening, everyone. So it was very nice to hearing everyone, like mostly Lalit and recently Krishna. So actually, I have been in market since 3 to 5 years, and I basically, I'm a kind of momentum investor. So what I found that for me, mostly I look for the company which are continuously giving the consistent profit. Like I generally see the sales and the EPS, right? And how the EPS of last 5 years. So basically, what happening that right now, since this crash is happening since last 1 and 2 months, so a little bit, my strategy is not working at all in this sort of market. So I'm a little confused that whether I need to improve on my investing part, like that Krishna is mentioning about a macro and how the we can correlate with the prices, which company is affected by mostly macro factors like oil pricing hike or inflation rate. So I just wondering that you guys can recommend me some sort of books or something that I can broaden my knowledge in those areas, because I'm very good in momentum kind of setup, but I want to understand much more about fundamentals to correlate with my momentum investing. So, can you please recommend me some sort of good books about it to start with, start to learning about this macro fundamentals?
Sure. I think there are a bunch of good books that are available. You can look at, if you want to understand valuation, you can look at something from Ashwath Damodaran. Um, there is Dando Investor by Munish Pabrai, which goes over a more fundamental sort of stock picking style. You can look at, if you want to go into the really really strong competitive advantage kind of companies, you can look at uh, books by Saurabh Mukherjee. And if you want to learn more about, tailwind based investing, I would also suggest you look up, not only the book is Joys of Compounding by Gautam Beth, but also look up his videos, because it's something that he practices often. In fact, I've hosted him on Twitter Spaces, so you can just go to YouTube or on my Twitter profile and look up the discussion that we had, and
Mm-hmm.
see from there. Lalit, you want to add anything?
I think fairly you have covered across. I mean, going deep, you might have something on a Peter Lynch learn to earn kind of stuff, right? Orbiting the Wall Street, one upon Wall Street, you might have. But yeah, for someone who is beginning across, what you have mentioned is right, and more so from an Indian perspective, you have rightly mentioned the books which one can always look. Probably Santosh Nayar's Bull, Bears, and Other Beasts might be one addition which I liked purely because it gave a good amount of history in terms of what used to happen in 1990s to what we are doing now, right? So that can be an additional book.
Yeah,
Yeah, thank
definitely,
you.
very good one.
Yeah, sure. Thank you. I will look forward to getting those book, and definitely I will look going to show those video on YouTube. Definitely. Thank you so much, Dalit and Krishna.
Okay, so we had one question, but the user is missing right now. So I think we can wrap the space right now.
Perfect, should be okay, Vishnu. If there's nothing else, then this is good, great 2 hour plus interaction which we have had.
I just want to thank Lalit and Rigi for putting this together. It's been really really awesome, to share the stage with someone with 2 to 3 times my experience in the market. Learn from his experience as well, and share whatever insights I've been able to gather over the last couple of years. So look forward to doing this again, and thank you to Lalit, Rigi, and the audience for showing up.
Same here, Krishna. Thank you so much. Yeah.
Thank you, everyone. Thank you, Lalit sir, Krishna sir, for sharing your valuable inputs. I hope for the listeners it was very informative. So we'll do more such sessions so that we give more inputs to everyone. Thank you, everyone.
Yeah. Thank you, everyone. Good
Great,
night.
great.